Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday 30th of September. There's a little bit of a mixed outlook today, nothing too significant in terms of market direction. We've seen that the dollar is a little bit higher, and that little gain on the dollar is broadly due to the weakness of the euro, which has allowed the dollar index to tick a bit higher, but mixed pretty much across the rest of the markets, although there's a certain amount of weakness coming through on the Kiwi and the Aussie dollar. But generally speaking, the yen had been gaining. It's sort of lost that ground a little bit now as the dollar's made a little bit of a comeback today. Sterling is broadly higher, nothing too significant driving the move, and there is going to be some volatility around sterling in the coming days, certainly around Brexit and the Conservative Party conference, but also looking at the, so I'm just trying to find, but also looking at the data points that we've had today, the UK final reading of Q2 GDP. It's a very slight amount of a tick higher, actually, on the upward revision on the year-on-year, but quarterly GDP still negative 0.2%. But that's helped to support sterling a little bit. But look at this, the gold price continues to fall sharply. Now, in terms of why we're seeing markets moving today, it's interesting that we've had the Chinese PMI data coming out overnight, and it was a little bit better than expected, marginally on the manufacturing PMI, and also the so let me just cross up, and also it's sort of a stabilisation on the non-manufacturing PMI, which has allowed the composite PMI just to tick a slight amount higher. Also, if you look at the Cajun manufacturing PMI, that was better than expected as well. So it's interesting that that sort of improvement in risk appetite has not really been followed through into major markets today. You've seen European equities basically mixed, nothing really doing in terms of direction there. FTSE underperforming as sterling outperforms. That is a consistent theme, that negative correlation. But interesting, if you look at oil continues to decline. It's been down across the course of the past couple of weeks, and continues to unwind that move lower. So yeah, oil back under pressure, and it really does look as though oil is moving into reverse. That's despite the comments from Mohammed bin Salman of Saudi suggesting that any sort of flare-up in the Saudi and Iran tensions could produce quite significant spikes in the oil price. So no real reaction on oil yet from that. But in terms of data points, for the rest of the day, there's nothing really else to keep an eye on. So my chart of the day is Euro Sterling. Now, what we've seen is Euro Sterling picking up in the past week. Now, I talked about the fact that in the morning report that it was back at a key crossroads, 50% fib. There's been a bit of a pivot area actually around the 89 figure area, and it's interesting that pretty much to the pip it hit that 50% fib level and turned back a little bit today. That comes in around the falling 21-day moving average, which has been a good gauge actually in recent months, and also the top of what is now a downtrend channel. So is this a moment to see Euro Sterling selling off? Now, the issue that I have in answering that question is these momentum indicators, which have started to post some more positive signals. A bull cross on the MACD, a bull cross confirmed on the stochastics. RSI hasn't quite yet made it above 50, but if it did, certainly above 45, but confirming a move above 50, that would be really, that would be suggesting that all three of the indicators were turning around. But the fact that the RSI has just fallen over a bit today, coming at the basically the top of the trend channel, the 50% fib, and also the 21-day moving average, that's interesting. So is this a rally that's lost momentum already? You can see on the hourly chart there's more of a slight positive bias that has been developing in recent days. But today's little drop back, the bulls need to come back in pretty quickly, I think, to suggests that there is an improvement still in process. You can still argue that there's a run of higher lows on the hourly chart over the past week, and you could turn that into an uptrend channel, really. So that recovery is still in place, given the fact that the market bounced off that 88.65 level above the 88.45 key pivot on a near-term basis. So there is still the prospect that this is a recovery play, despite the fact that we've got this negative candle formation at the moment. But we're still looking for the potential that this could be turn into a base pattern, and ultimately I think that resistance around 89 figure is going to be pivotal in that, and that's what we're looking at with regards to the potential for recovery. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.
That's enough.